Trent Bradshaw, Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Today we're back again with another market update. Today is February 14th, 2022. By the way, happy Valentine's Day. A couple things we're going to look at today. We'll talk about inflation, which we've touched on in several videos prior to this. We're also going to talk about expectations for rate hikes going forward. They've actually gotten more aggressive. All right, first chart we want to take a look at some of the actual cost increase that we've seen over the last 12 months. From February 2021 to February 2022. A couple of these numbers, used car prices up 41%. You just can't get a car right now with the chip shortage. So used car prices have actually appreciated more than anything else in the list here, except for right at gas prices and fuel costs. That's about 40% also. You look at, food increases have been anywhere from 10 to 15% over the last 12 months. Again, it's hitting everybody's pocketbook. So inflation is real, and we're seeing it on a daily basis. Well, if we look at the Consumer Price Index history on this next chart, you'll see we went all the way back to 2001 to where we are right now, 2022. You can see inflation has averaged somewhere around 2 to 3%. That's where it's been over the last 20 years. The only time frame that we've seen it go higher than that was back in 2008, financial crisis, where basically you could walk in, put your signature on a line, get a home loan, and of course real estate prices exploded off of that. Again, we know what happened at the end of that. It was a major market correction. But similarities, look at 2021 as we're entering 2022. You start to see the shade of red get darker and darker and darker. And basically what that's signifying is we're currently at a year-over-year increase of 7.5% as of January 2022. So that has basically raised the red flag to the Federal Reserve. They're talking about being aggressive with rate increases. We were hoping they would be patient, but it looks like probabilities are rising that there's going to be more than what we expected as far as rate increases. It could be as high as 1% in this March meeting coming. But let's take a look at the next chart. The next chart we've got to review is the probability in the March meeting coming up here March 16th. You'll see that we had a higher probability in early video blogs of a 0.25% increase. Well, now we're seeing a 66% chance that we'll have at least a 50 basis point increase. And what's telling about that is we're starting to see some headlines out of the Federal Reserve board members. Bullard, the St. Louis Fed, basically stated recently that we could see as high as a 1% increase in the March meeting. In this headline where it says Fed Bullard says the central bank's credibility is on the line, needs to front load those rate hikes. And again, he's calling for a 1% increase in March. Could be very trying on the market. The market's already corrected over the last probably three and a half months. To give you some of those numbers, from the peak of the market to where we are right now, the NASDAQ 100 is down 14.4%, so the technology index being down roughly 14%. The SPY, which would be a tracking vehicle for the S&P 500, is down 8.4% from its peak. Dow Jones down about 6.6%. The small cap index is the worst performing index, down 17.2% from its peak to trough where we are right now. It's getting ready to head into bear market territory, which would be minus 20% or more. The mid cap index down 9.4%. So we've seen anywhere from a 6.6% reduction from the peaks that we had back in November to upwards of a 17.2%. But if the Fed comes in and they're more aggressive than what we expect, and we're looking at 50 basis points right now for the March meeting, if they come in more aggressive than that, it could put a lot more pressure on the market. You got to remember the Fed is no longer printing $120 billion a month as they were doing over the last 2 years, basically flooding the system with liquidity. That has been taken out. Now they're going to hit us with aggressive rate increases. And when that happens, the overall market normally does not receive that too well in the near term. So prepare for volatility. We've made some adjustments in the portfolio to help protect. But again, there's no way to remove 100% of the downside if volatility picks up. Again, we're going to be proactive, get back with some videos and some updates in regards to that. And if you've got any questions, concerns, please reach out to us. We'll be glad to talk to you about those. Join us on social media. Want to get those updates to you? Look forward to speaking with you soon. Trent Bradshaw with Mind Your Money, Bradshaw Financial Planning.